Welcome to all our panelists and our audience today. The title of the session is Simplifying and Reshaping the Digital Wealth Management Experience, a topic that at GTN we are keenly interested in. And as a quick introduction for folks who do not know GTN, GTN is a fintech provider of global trading and investment portfolio management solutions. On the global trading side of things, we work with clients that offer self-directed trading services to their own customers. So it's a global trading platform with multi-market, multi-product execution, settlement, post-trade custody services. But in addition to that, we also offer a wealth management and portfolio management platform designed for investment manager, asset managers, EAMs, looking to digitize their operations. So we provide the technology, the services to these clients for them to be able to automate investment governance, portfolio management, client profiling, portfolio creation, and so on and so forth. So we're a platform provider, but we also are a regulated business. So in Singapore, for instance, we're regulated by the MAS, and we hold the CMS license, and we're regulated in all the markets where we have a presence across geographies in Dubai, in London, in the US, and opening offices in Hong Kong and in Saudi, for instance. And so when it comes to the wealth management landscape, we know day in, day out, all of us on the panel and in the audience, that we're going through pretty rapid technological transformation. Oftentimes, with some challenges in terms of turning them into a reality for customers. And so how does this technology helps in simplifying, reshaping the digital wealth management experience for the end customers? This is what we'll be talking about, and we'll focus on this exactly, reducing the frictions, lowering the barriers, and leveraging those digital tools to create the seamless and personalized service or experience that customers are now really expecting from platforms or from the banks or from service providers. So as a general, initial question, I'll turn to the panel and ask, how do you see the role of those digital tools in enhancing the customer experience in wealth management? What is it that you do, in your business or in your market, in order to maximize, the outcome for customers leveraging those digital tools? And maybe we can start, because we've got a lot of people from Singapore, but maybe we can start from a little bit further away in the Philippines with Dino, because I think what you're doing is quite interesting in the Philippines, and as an overall question, that's something we can start with.
Yeah. So I guess in the Philippines, as you've mentioned, contrasting it to the more developed markets such as in Singapore or Hong Kong, it's at a very early stage. But if you look at how it's progressed over the past few years, it's gone leaps and bounds, and that's across the market segment. So the Philippine market is generally underbanked, so you've seen a lot of prevalence and a lot of headway from the non-conventional and non-bank sectors, such as the e-wallets, and the e-wallets have really kind of allowed the leapfrogging of financial services for the mass market. So a player such as ourselves in Atram, we've kind of participated in that by providing our investment products and investment funds within these e-wallets. And it took a little bit of engineering to do that, because it's a wallet. You have to sachet the investment sizes. You have to generally introduce simpler products. But we've seen a lot of traction, not a lot really in terms of AUM, but a lot in terms of the take-up and number of accounts. So for us, for example, we've seen our numbers grow, number of accounts, 2 million customers over the past few years. Bite sizes are really small, but that's to us, that's kind of the long game when it comes to the retail market. In the higher segments, particularly on the wealth and maybe on the private banking side, what we see is the approach really has to be a bit more hybrid in nature, and because the market is not used to doing everything fully digitally. And typically, what we see as an important part of the digitalization journey of the wealth management sector for those higher segments, it has to be a complement to your traditional RMs, to your traditional sort of brick and mortar, and the agents. No? So that's kind of the things that we're seeing right now. It's a little bit different, I think, from the more advanced markets such as Singapore, where you see a lot of self-directed or DIY solutions. No, but we are seeing a lot of progress and a lot of interest from the different players here.
Interesting, thank you. Alex, if I can turn to you in terms of, so you're in charge of the products at Stashaway, and you lead the product management and design teams. Fully digital, hybrid, something that Dino touched on, the hybrid element of it. Is it something that you recognize also in how you're, looking at improving the client experience with digital tools? Does it have to marry both the human and the digital?
Yeah, I mean, absolutely. Taking a broad strokes perspective, one, echoing what Dino said, I think it's very market dependent. For example, the experience we facilitate for customers in regions such as Thailand is going to be fundamentally different, not just being the language, than Singapore. And versus my own experience 10 years ago building Nutmeg in the UK, right? In a different decade, it was much different as well. But on a broad stroke, I think it's all not the high pillars, right? It's digital tools at the end of the day, for me, are about two or three things. One, about empowering people to do more themselves with confidence and more easily and on their own time, increasing the accessibility, and ultimately should help to reduce costs to the end consumer. I'm a big believer in hybrid, to be honest with you. I don't think that digital will ever cover 100% of the use cases. But to be clear, I do think there are use cases where it's proven its ability to really cater to those needs for a lot of people. So very broad strokes, happen to go into more detail, but I'll leave it open to others.
Thank you. What is your take on this, Sam, from your perspective and to us?
Yeah, hi, great to be here, Julian and Michael, for hosting. Yeah, I mean, I've been using this phrase a lot recently, and we like to say that we're fully digital and fully human, because I think there's been a lot of like different phrases bandied around: hybrid, bionic, digital first, which is a phrase that we used to use as well. But bottom line is that I think that we've gone beyond that initial stage of digital adoption in the space of wealth. As you guys know, and Dino was explaining how, the adoption in digital solutions and the digital experience really started in, commercial banking experiences of lending and, deposits and FX and stuff like that. And wealth was relatively slow in adopting digital. And it really was post the COVID crisis, I think, when we've really seen a takeoff in that. And, many of the players here with us today have contributed to that. And we're all in this together to try to, improve the user experience and enhance the experience of the average, especially retail investors who previously didn't have access to a lot of this. So the reason I call it fully human and fully digital is, somewhat related to what Alex was saying, is that people are, not divided according to their demographics or age. I don't think it's a gender-based, it's not income or wealth-based. Really is a preference now. So there are people who are going to be fully digital, and it could be a 65-year-old, not that tech savvy, but willing to just not engage in human interactions. Doesn't really require a hands-on experience because they may be very well versed in a lot of the things or very cognizant of the things that they actually want to do. And they'll do it just purely digitally without any interaction. And there's the 20-year-old tech savvy guy who has no idea what he's doing, who wants a human to guide him on the onboarding process. So all of these things, I think, are a prelude to a hyper-personalized kind of experience. And that's what we're building here at Endawas and many other people as well. But Endawas has really been at the forefront of, enhancing the user experience, the UI, to provide efficiency, provide convenience to every digital user. But at the same time, we're fully able to provide a human experience with licensed and registered client advisors who will handhold them not only in the onboarding journey, but really sophisticated institutional quality personal financial advice so that they can really map out their long-term goals and preferences. And then leveraging the technology to implement that and maintain and manage, monitor, and enhance their investments so that it can all lead to better outcomes and at the same time achieve lower cost, which is tremendously important and the benefit of digital solutions. I'll also stop there so that others can have an opportunity to speak and we can delve into other aspects into more deeper conversations later.
Yeah, a few interesting points here. We'll come back to. Sebastian, on your side, I mean, you're looking at brokerage self-directed investing at SAIF, but how do you guys look at digital tools when it comes to customer experience? From a broad perspective.
Yeah, no, I think I can only echo a lot of what the other speakers already brought up. I think first and foremost is really about the preference of the user. They want digital services. It's not just about the cost saving. It's really they want to do certain things themselves. And as a result, this will really level the playing field, I believe, because 90% or so are really like quite standard processes and withdrawing funds, adding funds, doing a trade, etc. And all of that can be done very easily digital. And by doing so, there is no difference anymore between a high net worth and any other retail customer. And this is really one of the big opportunities I see. I think we at SAIF, we of course are digital first. We always said we use a slightly different phrase. We always said digital doesn't mean no one's home. So I think we also, like all the others, we have some sort of a hybrid approach. So like most activities are done fully digital. But if there are special cases, if there are a bit more complex situations, then we have a team of advisors, customer service, etc., which can help. And there, I think it's still important to have some of this human touch, if and when really needed. And I think now with the like AI and all machine learning and so on appearing, I think this will even accelerate further, right? How can you do even more personalization, which was not possible before, but also like extend the channels on which digital where digital service is happening. So from purely being text-based and so on to being voice and video and all kind of sort of things, which I think going to be really interesting. What's going to happen in the next few years, and I think it really will allow for upcoming players to really disrupt the market and lead to quite a lot of changes there.
Wan Chen, from your perspective, I mean, DBS obviously is at the forefront of being a leader in the digital space, and customer experience is front and center. What's your priorities in terms of enhancing that client experience?
Thanks, Julien. Thanks for having me here. I think at DBS is really about how firstly, we're coming from a very much a more traditional background, right? Where, however, that being said, we do fully intend to and have been investing to leverage on technology in order to scale, to deliver a personalized experience to our clients that's meaningful. And we at DBS, what we do is we provide clients with a self-service platform alongside that traditional advisory service through our front office, and use technology and AI not only for the self-service model, but also to augment and better equip our front office in daily tasks, your routine documentation, your client engagements, for example. like some of the panelists have shared as well. It's really about presenting choices to our clients. Some of our clients will prefer a digital-led self-serve model. Across age groups, there will be that component of them that will do it. And we're at a maturity where we know that the digital adoption penetration, where it's roughly going to be at, right? And then we'll have clients at the other end of the extreme who will be strongly prefer a high-touch front office-led service offering. And then we've got the middle ground where customers are comfortable with a hybrid model. That being said, I think it's important that we have effective communications with our clients so that we showcase options available and allow our clients to really be empowered to select the type of service model that they are most comfortable with, while knowing that regardless of what their choices are, their needs are still being well taken care of. Their wealth management services are still being provided at a similar level, a same level that comes from DBS Bank in the same way.
Wan Chen, if we can,
Sorry, Julien?
yeah, I think there was a bit of a delay in the voice, maybe on my side,
Oh,
but
sorry.
all good.
Is it okay now? Okay.
Yeah, all good.
Okay.
Staying on with you, if you don't mind,
Sure.
digital platforms, technology, do you see them as the primary enabler for creating frictionless client journeys? Right. We talked about hybrid, but in terms of the actual tools that are at our disposals, right? How do we enhance that experience, but in a way to make it, frictionless? So before you answer, at GTN, we spend a lot of time in trying to combine, an approach that is digital first with reducing as much friction as possible, right? And so we're working a lot on products that are embedded, right? And we work with fintechs, we work with traditional banks, sell-side securities firms, EAMs, wealth managers, but we also work with consumer businesses, right? So we could work with a credit card company, we could work with a taxi company, we could work with an eBay type of company, and embedding inside the consumer journey and investing, if not, a trading experience that is really frictionless. The consumer would have invested maybe rounding up to the next dollar, a fraction of a dollar into a fraction of a basket of stocks, for instance. And so that, elimination of the friction and therefore democratizing access to investing, if not trading, is something that we really spend a lot of time developing and parts by parts bringing to market on the back of what we offer in terms of fractional trading capabilities, round the clock trading capabilities, investing, and so on. So back to you and the question, how do you really make this experience frictionless, right?
Yeah, sure. Happy to share. I think while I fully agree that digital technology is indeed very much a key enabler for frictionless client journeys, I strongly believe that the real breakthrough comes not just from building increasingly advanced platforms, but truly the integration and the collaboration that comes across the wealth ecosystem, as I call it, across investment product types, across services, and across the varying levels of the wealth continuum. The fragmentation that has come from multiple platforms that are created by these digital islands as we evolved, where the platforms operate in isolation. I think this is one of the significant challenges that we observe. And within wealth management itself, right, you're talking about this fragmentation leading to a disjointed client experience where clients would toggle between different apps, different portals, different logins to access the information they need. And it also results in inconsistent UI, UX, fragmented services, and typically getting a holistic view on your financial picture then becomes a lot more challenging than what the technology of today really should be, make it seamless, right? So wealth clients will use a platform for news, use a different platform to monitor different parts of their portfolio, go to another platform for investment execution, and yet another one for advisor communication, all separate islands. I think to truly deliver that frictionless experience, these silos need to be broken down through partnerships and collaborations within the ecosystem. to transform these isolated systems into really interconnected digital ecosystems that work well together. In addition to that, the last leg of it, right, your integration into your order execution systems is also critical. Once you're having that news, having that idea coming in, a rebalancing to be done, being able to go in quickly to perform the trade in a timely manner, it reduces delays, you catch the pricing you need, it reduces the chance of human error, so that then clients become assured that as they are managing their portfolios, whether on a self-serve basis or being supported by an RM, this is being done with higher efficiency and lower risk for any potential losses, for example, right? The DBS digital platform, DBS Digibank Wealth, we cater to the end-to-end investment journey and the needs of our clients. So all the way from idea discovery through our news and research content. From there, we have you're one click away from your wealth portfolio for your monitoring analysis, where we've got tools to help you slice and dice and look at your portfolios in various ways, be it P&L, be it fixed income maturities, for example. And then, of course, from there, we go into our order execution capabilities, which really just goes across your equities, funds, FX across all major currencies. So this really ensures that clients have the right information available at the right time, and are actually able to take action in a timely manner. And I think that is really really crucial amidst the volatility of our financial markets. It's really not about technology, but it's really about creating that customer-centric customer experience that is flexible and agile enough to meet the evolving, client needs or client expectations, right? In partnership with technology. So again, I think the future of wealth management really lies in bringing together our ability to pull together this digital wealth ecosystem to allow clients to navigate their various different financial worlds effortlessly and seamlessly through an intuitive interface, such that you get your holistic all-in-one portfolio view, your advisory services, as well as your order execution, investment product execution capabilities, all within a cohesive and intuitive interface. So in conclusion, I think digital technology is indeed very much a key enabler for creating value in wealth management, but where we really unlock the benefits of that is through developing the ecosystem to create that value, unlock that value for clients, and create scale for our businesses.
Interesting, thank you.
Mm.
Alex, what does frictionless mean at Stashaway, and how do you make it a reality?
So first, I would definitely echo some of the things Juan should said. Now, the strategy they might be taking at DBS of wanting to be the one-stop shop, obviously, I wouldn't compare Stashaway's intentions being quite the same. We're at completely different stages of our journey, and we have different intentions. Now, actually, a seamless experience is one of our strategic pillars. And to me, it's enabling a customer to do something in one shot, right? As simple as that. Whether I want to reduce the amount of times they have to go back and forth to solve a problem, to deal with the frustration, to search for information, to gain some advice. That's what I mean by being able to do something seamlessly and in a single session. Now, digital, to answer actually your original question, I do believe that technology, it's hard to say digital technology, but let's just say technology has certainly been probably one of the biggest enablers over the past decade to creating, frictionless and seamless journeys. So full front, I would say that. But having said that, I really also gotta admire and give kudos to the many regulatory bodies all across the world, which have done great work in adapting to the changing tech landscape in order to help firms such as Stashaway and other players here as well leverage that technology. It's not just a one-sided thing, if that makes sense. We really have to be cohesive in how we work with different bodies, with different entities to unlock value and to unlock these use cases, which, to ultimately achieve, I think what we're all trying to do here is to, benefit the end consumer. So, yeah, in a nutshell.
Thank you, Alex. What's your take, Sam, on that point?
Yeah, I mean, I think in this day and age, I think most digital platforms have a pretty seamless and frictionless experience. I think that for us at Endowas, what's important for us is creating a total wealth platform that is holistic in its approach. So that was one of the reasons why we really started with the pension system here in Singapore, the Central Provident Fund, and becoming the first digital advisor to seamlessly invest your CPF, which is your pension money, your SRS, which is your individual retirement account, and your personal savings and private wealth. So all of the source of funds that is available to you is now available in a single app to seamlessly invest towards a common goal, such as retirement and retirement adequacy and long-term goals like that. So, removing friction for you to, pool your assets. Because the problem with investing in many places is that it's scattered across your brokerage, your, in long-term investment, your pension and your private wealth and your private bank and your commercial bank. And Endows is the first platform to really bring that together in a frictionless and seamless client journey, as you suggested. But there is a lot of iteration that goes into any user experience enhancement on the platform. Like, for example, just really doing the client risk assessment when a client is onboarding and getting going on their long-term investment journey on the Endows platform. We've literally changed kind of the format and the design maybe 50 times to really perfect the balance between what's important in terms of the sophistication and then also the simplicity. So users can't be blocked. They can't drop off at the stage because it's such a critically important thing, but we can't make it too difficult so that clients actually don't really put in the data that they need to get the outcome and the output that they really need to get going. So I think really finding a balance always when you're designing product and architecturing kind of the system is critically important. But many great tools are available. I think for us, the move to AI, we are one of the first to adopt artificial intelligence across our client journey, whether it's at the chatbot level or product due diligence or client advisor tools, and an internally developed large language model to enhance that experience. So those kind of efforts, I think, will continue to improve the client experience and the client journey.
I'll come back on the AI topic. Vastly interesting. So thanks for mentioning it.
Nothing less.
What is it that you're concentrating on, Dino, from the Philippines when it comes to that client journey? Is frictionless already a priority, or something that needs to be achieved at a later stage?
It's still something that I think generally is being worked on. I think the way we look at it across the client journey, we kind of cut it up to three phases. First is entry or access. The second is efficiency. Then that's where cost optimization of, and the third is experience, value add, the advice, and the overall experience. I think right now we're kind of in between the access and efficiency part from in the market that we have. Some of the pain points were mentioned earlier. Aggregating stuff, people get their news separately from where they execute, from where they get, administer their portfolio, and where they get the advice. So, and also trying to integrate that with into a hybrid situation where you put in the RM somewhere there to be able to assist the client. So in the market that we're in, I think it's a little bit earlier in terms of stage. There has been a lot of, and it's, as mentioned also, it's accelerated over the past few years, particularly with COVID, during the pandemic. And there's a greater amount of acceptance. And what we're seeing now is clients are getting used to these platforms, and they are starting to expect to see these things, and slowly moving to the experience part where Okay, they now accept the fact that they should be able to see their portfolio on a regular, daily, or instantaneous basis, getting all the news, advice, and all that they need, and now demanding it to be a little bit more seamless now. So that's kind of the focus that we're in right now, still trying to aggregate and put these things together into cohesive platforms, because it's also largely dependent on the underlying technology, or connectivity with the banks, or connectivity with the investment platforms. No, but we are seeing a lot more interest and take up from the clients, and you're starting to see them really. It encourages them to actually invest more, and move away from traditionally where they would just put their funds in a deposit product.
Excellent. Thank you. Thank you. Sebastian, I'm interested in this question also from from the perspective of SAIF offering self-directed brokerage and access to trading, as well as investing, wealth management. So how do you marry both, and how do you make that seamless, frictionless, as we've just discussed?
Yeah, I think it was very interesting for me to hear about others talking about, like allowing all different types of funding sources on one platform. And I think that's really interesting. I think, as you mentioned, what we focused on is we wanted to offer all sorts of investment, because what we realized is that one client does not want to only do trade stocks, but the person also wants to save. And for saving, of course, they want to have no or low risk kind of product. So what we did in SAIF is that we said, okay, we have 3 different types of offerings. One is our cash management solutions. These are exactly those products where people can save with no or low risk kind of products. Is either deposit-based, like the fixed deposit-based products, or money market funds. Then we have our what we call managed portfolios, and these are for people who either don't want to spend time or don't have the knowledge to know what to invest in, and we manage it for them. And they exist for all sort of typical goals people have, maybe retirement, so like growth-focused portfolios, or is it fixed income, or certain themes. And then we have the self-directed part, or what we call brokerage, is where people can choose what they want to buy, and they read interesting articles, and they read about AI and all these companies which benefit from it, and they want to buy NVIDIA stock. And what we realize is that our users, they're not picking one over the other. Many of them are across 2 or even all 3 of these verticals, because they use it to save, but also buy individual stocks from time to time, as well as have a passive portfolio for the long term on our managed portfolio. And we focus a lot on reducing friction when it is about moving between these different portfolios, so that someone who maybe wants to leave the market for a little bit, sell some of his stocks, that he can still earn great returns on this idle cash by moving it into our cash management solutions, for example. And making this movements really fast and frictionless, I think, is really something which we focused on a lot, and we see this really work, because that means people not gonna leave the platform, but they rather move in between these different verticals, depending on what is their need at this given time.
Excellent, thank you. Yeah, that's very interesting, because it's not common, obviously, to be on a platform where you can have access to different channels, different journeys, whether you want to be investing on your own accord or be advised. So
one small addition to it, I think the other thing which is important for us is we have built this platform really agnostic to what is the underlying asset. So we have portfolios which are built, individual stocks, like our REIT Plus portfolio. We have, for our fixed income products, we work with mutual funds, usually actively managed funds, which we think is still the best or the most beneficial for customers if it comes to this asset class. And we have ETF-based portfolios for the long-term growth, which are the very diversified, globally diversified portfolios. So it's also really, agnostic to that. And people might not even know that they're moving from completely different asset types by moving between different portfolios. So really remove the friction there, instead of like moving maybe completely different platforms.
Thank you. Before moving on to the next question, and my next question will be around personalized advice or personalized experience, and we'll throw in elements of AI or machine learning that could be enablers, right, to hyper personalized advice and experience. But before going there, to finish off on the frictionless or seamless, I'm interested because, as I said, we work a lot on embedded finance, right? And so I'm just throwing it to the panel. Anybody can answer. But what is your view of wealth management or investing really embedding itself into what we do every day, right? I buy a cup of coffee, I round up to the next dollar to invest that fraction into a basket of stocks that I will have pre-selected, or a model portfolio that is commensurate with my risk appetite. Or super simple use case, I invest $1 a day, for instance, right? Or I send to my brother a gift card, which is actually a fraction of a Tesla share, right? So and all these take away all the complexity and what can be intimidating for a lot of mass retail consumer, while inviting them on the debut of what could be an investing journey. So what is the view of the panel, whether you're working on it or not, and what do you think is the potential of embedded finance today or for the next decade? Anyone can raise their hand. Or starting with Wanshan, maybe.
Sure. I think conceptually it has legs. Some of these use cases we have dabbled in and experimented with some in the past, right? But that being said, also I think we need to navigate the regulatory constraints as to how we implement some of these use cases, as well as some of the, I guess, technological and settlement type of constraints around breaking it up into fractions. Those are some of the key considerations that we have had around some of democratizing some of these instruments, right? And also on the topic of whether as we democratize investment products, are the consumers that we sell to also fully aware as to the risk that it entails? That is something that we have been fairly cautious on, based on the position that I'm coming from as well. So while we do see the use case, we are taking a slightly more cautious approach in terms of implementing it on a broader scale for retail and really your mass affluent clients. But I think as it goes into your accredited investor space as well, while they would be able to buy in larger denominations, being able to doesn't necessarily also mean that they should be introducing such portfolio concentration, for example, into some of the assets. So with some of the chunkier assets like structured products, like bonds, I think it's something that we are actively looking into to make it more accessible to a larger segment of our clients. Really, that sweet spot where you're wealthy but not that wealthy yet. That kind of in between spot where going in on an instrument 100, 200,000 will be a little bit of a concentration for your overall wealth portfolio. And there will be merit in going in perhaps on smaller denominations, maybe not down to $1 or $10, right? But just being able to chunk it down to $10,000, $25,000, I think there's merit and there's room there.
Alex or Sam, what is your view on opening up potentially new market segments, right? I mean, embedded finance would be, from where we sit, would be fit for purpose to attract millennials, the gig economy, right? That doesn't necessarily have a concept today, right? Of accessing investment or trading for that matter.
I think you had your hand up first, Sam. So
Yeah, you can go first if you have that.
no problem. Yeah,
Okay.
go for it.
Up to you. Okay. No, I was just gonna say that it really depends on the market and the kind of service that you're trying to provide. I think in developed markets like Singapore and Hong Kong, it really doesn't make sense for us to be doing the roundup or dollar investing, especially when the cost of living is rising so much and we're talking about the wealth business. We're trying to save for our future, to buy a home or to prepare for retirement. Like, is $10,000 going to really make a difference to your retirement in Singapore? It isn't. So that's why when we began the business back in 2019, we never positioned ourselves as a millennial start with $100 investment. We had in our beta testing, we had a $100,000 minimum. And then we lowered that as we launched CPF and retail to $10,000. So it was a very different approach. I think a lot of people were kind of confused, but it's really because we wanted to target that 30s and 40s people, the sandwich generation, as we call it, who are struggling to build a nest egg for the future. And we wanted people who have gone through those difficulties of trying to, pick stocks and trade themselves. They don't have the time with children, with a career to build and with elderly parents to really outsource the heavy lifting of, choosing the best investments and the sophisticated solutions. And that it really requires a lot of effort. And we were the first to build a truly independent fund platform, to buy any mutual fund unit trust at the lowest cost by accessing institutional share classes, returning all trailer fees and any commissions that we receive 100% back to the clients. And those are the things that I think are really more sophisticated solutions to meet the needs of the client. And then we've now gone into accredited investor solutions in private markets, private credit, multi-strategy hedge funds like Millennium and Point72, which are all on our platform. Those kind of solutions, I think, are the more difficult ones to solve. And it's easy to just peddle another private equity closed-ended fund or a VC fund, but really trying to solve that across a multi-manager solution, solving for the liquidity problem for first-time investors in these more sophisticated assets. I think these are the things that we wanted to focus on. And, every player has different priorities, different demographics they're going after. And so, for us, it was never a focus to go into those kind of segments and really focus on solving the bigger kind of problems in the wealth business.
Alex, you wanted to add something with regards to embedded finance, right?
Yeah,
and
so if I wanna-
democratization and going down to the opening up of new markets, potentially new market segments.
Yeah, so I guess trying to loop this back to embedded finance, right? And if so, to make sure we're on the same wavelength, if you're talking about as a service, being able to call an endpoint from a third party to get some type of content in your offering that's embedded, right? So as long as we're on the same wavelength, you're not going to go into to other topics. Okay. What I don't want to see anywhere is I'd say mal gamification or gimmickness going on. Frankly, I personally wouldn't want to live my life thinking about every time I purchase a cup of coffee, it's going to give me 3 cents. So I can roll up to buy a quarter of an NVIDIA share down the line, and then I'll give a wacko referral to my friend Joe Arwanchin so he can then get a voucher and a promo code and do all of that, right? Which is a real potential if everybody starts connecting to each other, hitting each other's endpoints to procure information, and it kind of goes wild. I think sometimes the ecosystem can go a little bit nuts. Now, having said that, I do think in the right place, at the right touch point, for the right use case, it can be extremely beneficial. For example, what I've seen players do is embed ways for people. Say I'm going through a mortgage application process, right? I can now go on any type of marketplace and very quickly procure a list of mortgages that would be viable for me, whether it's based on the best rate or the tenure or some variant as well. And I think that's a very meaningful decision in a person's life, because we're talking about a mortgage. It's a bit more than trying to round up 3 cents off a Starbucks coffee from a card to get some airline miles and have everything in this crazy ecosystem. So, to kind of wrap up my question, I think as long as it's done the right way, and I've done a lot of this through business I did when I was at funding societies, working on building e-commerce and financing platforms in regions such as Indonesia, even more so. It has to be done the right way for the right purpose, or else it becomes very gimmicky, very in your face, and in particular, in markets such as Singapore, where everything actually I think is quite well integrated anyways, especially on the wealth front and the infra front. We want to avoid getting mal gamification going on, or people focusing on the things that truly aren't going to move the needle for what they need. Does that make sense?
It makes sense. Yeah, I think we're looking at at ways also to take away the focus of investing or trading by
Shouldn't be top
embedding.
of mind. Yeah, it should not be top of mind.
It should not be, but it should be part of what the consumer ends up being able to start doing, right? And that whether it's called frictionless or seamless, it gets them onto that journey, right? Without even them noticing or knowing or having to think. Because I agree, if they have to think about it every corner, then it's a little too
a bit much.
Too much, yes. Dino, you raise your hand before I move to the next topic, because we would be remiss not to talk about AI and how the panel sees the potential of AI.
Maybe just a quick perspective on the embedded finance from
Sure.
what we've seen. I think the concept of embedded finance, as I mentioned, we've seen it a little bit in what we've seen in the Philippines with regards to the wallets. But I think from our observation, it works only for up until a certain point. The market is comfortable to embed it in other activities, in other parts of their lives, only for a certain portion. But once you get, say, to a certain scale, certain level, certain amount, there is a tendency or a preference to have it segregated as opposed to embedded. I guess that goes with how you're comfortable, how comfortable you are in the safety and security of your funds, particularly when it goes to a certain extent. So what we've seen is, and then as I take myself as an example, my big investment portfolio is segregated. They're in the traditional financial institutions. However, a certain part of my funds, the stuff that I use for day to day, in the e-wallets, can also have an investment component that's connected to those other parts or other products and services. So thought I'd just share that with you, that there is some space, but you typically will see it only contained in a certain area. And once a consumer or a client graduates or gets to a certain level, then the segregation part comes in as something that they desire.
Excellent, thank you. Changing gears and trying to touch on AI. So my question will be very simple, but I hope everybody can participate. How can AI transform the investing journey or the investment journey? Sam, you touched on it very briefly earlier. If you want to take that on first.
Yeah, sure. Happy to. We've been very excited, but really tempering our AI strategy to be really focusing on the two areas, the two E's, which is about enhancing the experience of the client and enhancing the experience internally. Efficiency internally. So I think that application of AI for us on the experience side was, really building an in-house large language model and training that up to be used effectively for client interactions through a chatbot. So we launched that over a year ago, and we reduced human intervention by 70%. with more than half the interactions on the chatbot being satisfactorily answered without any follow-ups. We have internal client advisor tools that, effectively, for example, if you see interest rates are falling and you want to like search for the highest duration bond fund that exists on our platform, our fund platform called FundSmart, then a client advisor can easily look that up and, spit that out to clients in their interactions, many such experiences. And part of the reason why that's possible is because we built our platform on a microservices event sourcing architecture. A lot of people talk about it, but I think we really have a very sophisticated platform that allows us to use a lot of the data and the event sourcing that is available to us in the 7 years we've been around with our client interactions. Also, we have a lot of repository of content. We've been very proficient in churning out great content, both written and video, and a lot of interactions. Finally, we have a sophisticated institutional investment office, a 15-person team that does, heavy institutional fund manager selection, fund due diligence. Each fund that we onboard on our fund platform, requires a 20, 30-page fund due diligence report that's fed into the large language model as well. So there's a lot of content, needless to say, and a lot of data that we can leverage to really enhance the LLM to a high level of sophistication. So what we call the WealthWise AI is used in multiple areas, not only in client interaction through chatbot, internal client advisors tools, but for example, fund due diligence AI and other sophisticated applications. I think there will come a time when regulations will allow us to open that up to client interactions for financial advice. But that's not at the moment something that we can do. So we're preparing for that future, and that will really enhance the client experience and the interactions we have with the clients, and helping them to reach their goals, I think, and achieve better outcomes.
Thank you. Wanshan, how is AI prioritized in the client journey for DBS?
I think for DBS, there's a few places where we've implemented or used AI to supplement the user journey on our client front end, right? Be it curation of news articles that will be relevant to them, curating investment teams based on some of the data points and what we know of the clients, giving them investment ideas that are relevant and we feel that would be interesting for them, right? But I think at the same time, we've also given RM tooling. For example, we have our own in-house GPT that RMs are able to use. We've got a bunch of other use cases that our marketing colleagues use to generate video content, image, as well as client communications content, right? What I really am quite keen to share with the group here is also how one of the use cases that we've industrialized over the years. We've implemented an AI-driven model that through that model, we actually tap on about 400 over data points to actually score and prioritize clients' needs based on a range of factors, from their transaction history to their digital engagement patterns. Each morning, what our RMs actually get, and this is why I say it's industrialized, right? All our RMs actually receive this every morning. They get a refreshed list of clients to contact, ranked by priority and supported by actionable insights. And this is what we coined as our next best conversation model. So the technology actually really just seeks to, or the AI model, right, really seeks to cover the fundamental question for our RM who is overloaded with too many clients. Who should I talk to first? When to talk to them? And what to talk to them about? So RMs then spend their time more gainfully on the conversations that actually matter and will move the needle. So on one hand, it's RM productivity, right? Getting the RMs to spend their time more fruitfully. But also it allows DBS to be able to actually be in a position to use AI to deliver that timely and relevant advice and improving the overall client satisfaction. In addition to actually prioritizing the client outreach, our AI model also then we transfer that onto the RM workbench to allow RMs to access essential client information with minimal preparation. So improving their turnaround times or reducing the amount of prep work before they go into client meetings, for example. So reducing the time RMs spend on administrative tasks, freeing them up to concentrate on the strategic client interactions, as well as augmenting them to be able to have better and more meaningful interactions with better outcomes. So really the goal is to give the RMs the insights that they need at their fingertips so that they can engage clients in the ways that make the clients feel informed and personalized, and also being able to, and I alluded to it, being industrialized, right? Ensure that RMs across the bank are able to deliver a similar quality of advice and timeliness and at the level that we would want to represent how DBS serves wealth to our clients.
Thank you. Anybody else wants to contribute to this team, AI?
Just very quickly, maybe. I think
Sure.
one thing, yes, is I think a common theme here, which I hear is like it's really like AI is not only what the customer actually directly uses, but it's really like throughout the entire organization, from development teams which use co-pilots and similar tools which just increase efficiency when it comes to development, throughout all other teams, from content to client communication, etc., where it really can help. I think at SIFE we have currently 2 direct client-facing AI applications running. One is focusing, I think Wan Shun brought up something similar, is on news. We have basically for all our brokerage users, we have a daily news feed, which is purely built based on AI, and it's built based on what is on their watch list, on what is on their portfolio. So it's hyper personalized. It's exactly the news which is relevant to them, and I think it really see that like very high engagement on that. The other one we have built together with Manulife in Hong Kong, who is the biggest MPF, the local retirement scheme there provider, where we have created a digital recommender tool, which basically helps people to optimize their MPF portfolio and builds something, again, personalized to them, which makes use of, the very large client base they have. And we have worked with them together to basically help our customers to get the most out of their MPF funds as possible, with, again, a portfolio which is really designed for their specific needs and goals. So I think, a good mix of applications internally as well as externally.
Excellent. I have one last question, if you allow me, Michael, because we've got 2 minutes left. But a quick survey around to the panelists, right? And if you could answer in 15 to 30 seconds max, what is the next big game changer in wealth tech that you foresee taking place? Something that's really going to be transformational, that's going to really surprise us in how you see the future, right? So if I were to answer the question, I would mention actually tokenization of real world assets. Going beyond the fractional ownership of stocks, tokenization would enable us to own pretty much everything from real estate to rare collectibles with blockchain technology enabling this to happen. This is where I would see to be the next game-changing element in wealth management. We can go around. I will point to anybody, but anybody who wants to take the shot.
I guess I could start.
Go ahead. 15 seconds.
Yeah, look, I do think it'll be the application of generative AI to push the boundary of what we're all doing. I think we're all a bit bored of just seeing, you should have an emergency fund next or next best action, but to see Gen AI actually act as an agent in addition to advisory, and then being able to action off the back of that, that'll be game changing in my view, because a lot more actions will happen.
All right, thank you.
If I can
Dino.
go? Oh, okay.
Oh, sorry.
I wanted
ahead,
to come in
Wanshan.
before I went too far. Just building on what Julien was talking about with distributed ledger technology and blockchain, right? I think for me, instantaneous settlement and being able to break down transactions into smaller bite sizes, I think that will be a game changer. Not only for your traditional equities, for example, but across a broader range of assets that's available today for wealth clients.
Real-time settlement, very good point. Yeah.
Yeah.
Dino.
Yeah, I think I agree with Alex. I think it's Gen AI and how it makes things more seamless, embedded, and automatic for everyone, as opposed to a more discrete experience that we have now. No, and we're starting to see that across applications, and it's going to be quite interesting how it applies to wealth management and finance.
Sebastian?
I'm just really looking forward to see how organizations who rely or really see their USP in human advice see, perform or do over the next like 10 years. Because I think a lot of this will be done better by some AI agents than humans can do at this moment.
Thank you. Sam?
Yeah, I'm going to be a bit different and say that, look, we're all trying to run commercially viable businesses. And in the wealth business, there's a lot of fat. And you want to go after that fat margin business. That is normally where the biggest friction is for individual clients who are trying to invest their wealth. That used to be in the unit trust business. The reason why we don't do stocks or crypto or ETFs even is because there's no friction. You can buy it for free at any brokerage house, right? So, for us, it's going after the fat margins. So unit trust in Singapore was painful because it had fat margins that, people took, and it took away from the returns of individual investors. I think the private market asset class is something that is now being solved through evergreen solutions, semi-liquid alt solutions as well. And I think there's a long way to go. I think tokenization could be, but not just doing tokenization for the sake of it, or just, sometimes add to the friction. I think there are real world cases in the fund administration and, fractionalization that can be done through tokenization, and that's exciting. And yeah, obviously Gen AI in advisory services, but specific to the use cases where it really adds value. Like, for example, in retirement preparedness, accumulation and decumulation, and having a hyper-personalized dynamic glide path that's driven by AI, that would be a really fun thing to look forward to.
Yeah.
Excellent. Thank you, Sam. Thank you, everyone.